Hey everyone, welcome to the Tech and Real Estate Podcast. This week we're going to be discussing home prices. What's going on in the market? Do we expect home prices to decline or increase based off these rising interest rates? I'm also going to be sharing my own story of a little bit about the first property I bought and the type of market that was, which is kind of what I see a real estate market going towards in the future. My name is Ariel Herrera with the AnalyticsAriel channel. We bridge the gap between real estate and technology. This is the news segment on the channel. Every Friday, I'm summarizing some articles that are posted on our private Facebook group so that you can get the latest knowledge of real estate and technology. All right, let's get started. CoreLogic recently came out with a study where they looked at data in the market, and they've stated that there are some overvalued housing markets, and as mortgage rates continue to increase, we're going to see home prices growth begin to decelerate. Over the last couple of years, so two in particular, there's been a really large increase in home prices, if you aren't aware already. So as we can see, a lot of areas have actually increased year over year by over 10%, which is pretty extraordinary, as usual is about 3%. So because of the pandemic, we've seen this explosive growth. However, it's not sustainable, and CoreLogic is stating that we should see a deceleration. So not saying that prices are going to go down, but they're just not going to increase as rapidly. And this makes sense, right? So because interest rates have been low over the last 2 years, a lot of people took advantage of that to move to either their first property or as a move-up buyer. So if they just move into a property, then what is their incentive to go to the next house if their payment is going to be even more? So for example, say if a family of 4 recently purchased a property for $400,000 and their mortgage is $2,200. Now, if they were to go look for that same price type of house and the interest rate has doubled, so maybe from 3% to 6%, they are going to see a large increase in their mortgage, possibly by $500 or $600. And this could make it unaffordable. So because of this, we're going to see buyers back out of the market. So you might be thinking, well, if buyers are backing out, then how are there going to be any buyers available to want to purchase these properties? Doesn't that mean that prices have to go down? Well, not necessarily. As we've seen, if you've been a part of trying to buy real estate over the last 2 years, you would know that competition has been one of the fiercest it's ever been in the U.S. markets. We've had numerous bidding wars with over 10 buyers on a single property that comes on market within the first couple of days. We've seen cash offers. We've seen deceleration clauses, meaning that whatever the best offer is, that offer will go above X amount. So say if the best offer is $30,000 over asking, then the escalation clause would say, well, I'll go $5,000 over that. Pretty insane. We've also seen appraisals waived and inspections waived, which inspections waived I'm very wary about. And because of this abnormality, it's not actually a bad thing if we reverse back to normal. Normal is a property being on the market for possibly several weeks. It may have 2 to 3 offers. There's a back and forth between the seller and the buyer. So the first property that I purchased was in 2019, in February 2019. And at that time, I was able to get a turnkey property in New Jersey. It was on the market for about 60 days. They had priced it too high. And I was able to come in after I did a price drop, ask for even lower, and purchase the property. In today's era, that would not be possible because there's such limited amount of properties available, and interest rates are still relatively low. When I purchased my property, the interest rate was 4.25, and I think it's right around there at this time, it's completely normal for us to revert back where there's not 10 to 1, so one seller and maybe 10 buyers. Now, there are some markets that are highlighted by CoreLogic, and they state what are the most overvalued markets. And you could see here that a lot of the southern states, Florida, Texas, Arizona, and also the Northeast, but South Northeast. And just because they say these are overvalued markets, it doesn't mean prices are going to plummet. Reuters came out with a similar article on record high house prices weigh on U.S. home sales. So this is one of the main things. We are not going to see all buyers back out and all of a sudden it's 2008 and people can't sell their home at all. No, we have a supply issue. And Reuters has some really great charts here. So they have one going back from 1970 showing U.S. home sales cooling off. Their description here is, with mortgage rates rising fast, sales of previously owned homes are at their lowest since June of 2020, which we know. In the next chart that Reuters has, which is super useful, they look at 4 different components that demonstrate the 12-month mortgage demand growth. And they show total mortgage applications, refinances, purchases, and then 30-year fixed contract rate, so interest rates. And from this chart, we're able to look back from the beginning of 2021, and we could see that interest rates were really low. Interest rates were below 3.5, and at some points even below 3. Now, as of January, where there's been a lot of a push to increase these interest rates, we've seen refinances heavily dip, as well as total mortgage applications. So this is signaling to us that there is going to be a cooling off within the mortgage industry, specifically for mortgage applications and refinances. However, this crash does not mean that it's going to come from prices. The last point here that CoreLogic goes over is the housing markets that are most likely to decline in price. So although in the other study they said that it is highly unlikely that home prices are going to crash, there are a few markets that they do take note of. And these are heavily in Arizona. There's 2 different areas there, Lake Havasu and Prescott, Arizona. I'm not familiar with either. They have a couple of marked in Connecticut, one in California, one in Massachusetts. I don't really know much about these markets, but I'm assuming if some of them are in Connecticut, Massachusetts, California, and Washington, maybe these are generally high-priced markets, and because of interest rates rising, it really is just unaffordable to obtain housing within these areas, meaning that they might decline. I would love to know what you think. Do you think that we're headed towards a market crash? And if so, what does that market crash mean? Do you agree that it's going to be in transactions and less buyers? Or do you think it really could be a decline in prices? And if so, which markets? To leave you off, I'll share with you my weekend plans. I am super excited going to Playa del Carmen, Mexico. And from there, I'll be going to a friend's wedding mid-next week. So if my availability is a little bit limited, that's why. I can't wait to catch some sun and hope you have a great weekend as well. Thanks.